could be the FOMC meet outcome. But what more to expect? Let's take it for this discussion forward with Anurag Singh joining us on the show right now. So Anurag, 25 basis point cut. Do you believe that the markets are already pricing in, or are you hoping for a 50 basis point cut as well? Because yes, now all US officials, especially President Donald Trump, is actually highlighting that it's been too late already.
Yeah. So, Srishti, this time it has been too late. I would concur with that. I would like a 50, but I think I'll take a 25 because I think we discussed a couple of months back. My estimate was, and that time things were not as clear, but at least the jobs data was out. My sense was that for the year we'll get 25 into 3, so 75 bips cut. So basically federal funds rate to 3.5%, 3.5 to 3.75, that range. And looks like we are going to get that, right? So if it is, they might front load it, right? Tomorrow 50 basis point. If not, then I think they'll do 25 in a row. So yeah, that's 25 is priced in. If it is 50, market will cheer a bit more. Not that it is not cheering up anyways. You know, the markets are at all-time high. So for now, it doesn't look like that anything can stop the US engine. At least for now, that's what it looks like.
And it seems like that, Anurag, for India as well, and especially, a very range-bound sleepy market suddenly seems to have woken up this week. And now further cheer, I mean, I can already see a print of well above 25,300, almost counting down to 25,400. I mean, all it took was that birthday wish from Trump to Prime Minister Modi.
Yeah. So first of all, I mean, I thought the discussion would be about trade. Who knew that he has this birthday wish in mind, right? That was a bit of a surprise. But we'll take it, right? It's good news. I've always held the view that there's no point trying to take on the largest economy. And I think common sense has prevailed. I would still keep my hopes low in terms of the output on the trade. But this is good that at least two leaders are talking. And as long as they're talking, I think we can move past the minor hindrances around trade. I still doubt if something very significant can come out of it, but at least there will be less noise, which will be good for the markets. That's my sense. In terms of Indian index, Aisha, I think it has been like 12, 13 months since the index has actually moved kind of in a range and has actually not broken the last barrier, which was formed somewhere around, I think, after elections, just before elections, June 2024. So I think there is still some time to go. So probably this year, or maybe first quarter of next year, we will still spend some time in the range. And there are reasons for that, but largely it is because, slow GDP growth on a nominal basis and less exciting earnings. So we'll see how it goes, but that's fine. I think we'll take it. It's as long as it's not dropping down significantly. I think market can take a pause for about 18 months. Already we are past 12 months, and then we can resume the onward journey based on what the earnings are. That's the key to watch.
But Anurag, what should be the portfolio balance right now? And I'm not talking about market cap division here, just sectoral allocation. If FIIs were to come back to India, you think one should have a large chunk of financials in our portfolio if one already doesn't have?
So Aisha, I've always believed that India's story is very, to a large extent, driven by financials, right? Because in a country where not every sector is very heavily organized, finance kind of works as a proxy because every credit has to ultimately flow from the banks or the NBFCs. So financials should always carry about 25% weightage, and that's the weightage of theirs in the index too, right? So I'm a big fan there. More or less, they might take some time, but they eventually perform. In terms of portfolio mix, Aisha, I continue to believe that 25%, as of now, 20 to 25% should be within the fixed income and about 75% should be in equities. Of course, it's a function of your age and your risk profile, but right now, at least till the time the P multiples stay about 25, 22 to 25 range, there's not a big bargain in equities, right? So there are phases like these that, the market goes through. And, we are at a point where you can't expand the multiples beyond a point from here. So the market just is following the natural rate of GDP growth and the earnings, which is just about 8 to 10%, right? So don't be overloaded on equities. Broadly keep a 25-75 ratio and keep some cash on the sidelines. If some correction happens, just jump in. But when I mean correction, I mean good 15 to 20%. I don't mean 5% correction or something like that. That's the, broad recommendation I have. Having said this, can I just add a couple of points? Look how exciting the globe looks like. Argentina was the hero for the last year. They almost doubled between 23 and 24 because of the Javier Milei phenomena. This year, people are piling onto Brazil. The ETF of Brazil, EWZ, has already jumped like 36% in 2025. Mexico has jumped around 40%. So, so things are exciting across. Korean market is up something like, 44%, right? So imagine, it always goes in, every market goes through cycles. So if you have run up a lot for some time, you got to pause a bit. So that's how the global situation is. I think FIs eventually will come back, but I think this heat up of the market needs to really take a bit of a breather in India for now.
Well, a lot of options there, and Anurag, thanks as always for your sound advice to our viewers.
Appreciate it.